The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, the Friday edition, November the 2nd, and my pleasure to be here up and running. Got everything going, and thanks for those emails from everyone saying, wish me best of luck, hope everybody's fine, and little bits of advice, etc., and I do appreciate that. 12:30 this morning, and Star got everything going, and you got no idea how you can miss these creature comforts, and we're online. Everything's good except for one thing. I got my special mic set up not functioning because I think I got the IP address. Something went wrong when I undid my computer on the one side to recharge it, so I'll get that fixed over the weekend. Meantime, back at the ranch, what we're looking at is a Dow that's had a fabulous day yesterday. Today's down 42 points at 13,189. Now, I'll give you the parameters right now. It's Friday, end of the month. We got another 2.5 sessions, and then on Wednesday there'll be the political results. You know, it's so fascinating. When you look at the charts and when you look at the documented evidence, it is so fascinating to see that what one doesn't hear, but which is actually what happens, is that during Democrat incumbencies, the stock market does very much better. And now we're at extremely strong resistance points, and we're going to see. Comes the result on Tuesday night. Now, you remember it was maybe 5 years ago that I predicted, based on my Market Watch, my Trends Watch analysis, that there would be a President Obama who, the way I was looking at the economy and everything to do with the socio-political economic outlook was that he would be a one-term president. And then about 2 years ago, after that Republican sweep, I said, I'm not sure if we've now used up that, because that Republican sweep I was expecting to come later. But once the prediction was made, it was just a prediction sitting out there. And the only caveat I made was that if the Dow was nicely above 12,600, that feeling of comfortability in the stock market recovery of that would be about just under 100%, should help. So I have no prediction as it stands right now, other than the one I made a long time ago. It's just sitting out there. When you get too involved, if you look at the New York Times front page, they do it. Well, I don't know if they'll do it this 100 years, but they did it for the last 100 years. It's so interesting, especially if you look at what is it every single day? I know they have it in the Boston Globe. What happened on this day? You will find that they will equate something like the great earthquake of 1906 in San Francisco to some absolutely unknown person, or some person that you don't even has nothing to do with world affairs, kind of a social comment, as on this day such and such happened. Yoko Ono, did something, and so my point being that the deeper you get into it, that's why technical analysis is so good, because you're not so totally involved that you're bringing up these isolated events. What I was going to say about the New York Times front page, you will find that as they were going to publication in the year 2000 and 2001, whatever it was, they would have these innocuous headlines or innocuous things that they thought were important, Son of Sam, or things like that. And how can you put that in the same category of world events? It siphons, it's a sieve, takes out the most important things, and it lasts forever. So my comments 5 years ago were then. Now I'm too involved. I can't really see exactly what's going on, other than to say it's a fascinating thing how the economic numbers, and we were looking at this months ago. I said there's a chance that we're going to start to see improvements as we go towards the elections, and we don't know. We don't know about the accuracy. We don't know whether they're right. But they are there, and they are fact because they've been printed as being the numbers. So it's going to be a very interesting period, a very interesting election, and we'll see what happens. On Wednesday, by mid-session, we should have at least a good inkling of what the market's response is going to be. Because remember, markets started responding positive when it thought that Romney was in the lead. Then all of a sudden they said, wait a minute, Bernanke, who's been the savior of the market, could get bounced. Always fascinating. All right, so let's get to the business of the market. So the Dow right now has made this arch. I wonder if I should do the white one. It's a little bit clearer. I've got the E-mini is making a peak D right now on the 120-minute chart, about to pull back. I'm about to type in with my other hand. See if I can do it. Okay, there we go. Dollar INDU. There it goes. It's a little clearer. So on the white background, what you can see is we made the arch formation. Now I'm making a U formation. Of course, I haven't updated them. These are the charts that are on my, what I call the desktop computer. They use it mostly for these charts. The other ones I did on my laptop. So this is what we're looking at right now. We're looking at the Dow at 13,187, down 45. And you've got an A, B, C. This is leg D in the 120-minute chart in the Dow as well. So this is where in the ChapmanWave, when you go from a trough, and you can count peak A, peak B, peak C, and then a D, that's when you've got to be somewhat careful. And the stochastics at 75% in the 120-minute chart. And this is how you've got to be a bit careful. When you're looking at the a daily chart, the daily chart says it was the left side, right side price time match, which succeeded in not breaking the left side low. It went to 13,039. 12,977 was the left side low. So there's an arch formation that's formed. I'm going to draw it right now. It's right there to right there. And now you got this little bounce that's occurring, which in fact could change if two things happen. One is if there's a spike into 13,000, I'd have to say the 13,250 area and holding, that'll be positive. But if there's a pullback, we just make another arch formation, small arch that's going to fail with the MACD pulling back. So those are the parameters to watch. On the upside, 13,250. Downside, I would have to say a break underneath 13,000, and immediately you're looking at 12,916 as the 200-period exponential moving average right there. Now, don't forget today we're going to be drawing another winner in the Great Panther Great Giveaway Series, Silver Series, and the 1 ounce winner will be announced. So we're waiting for the drawing, So continuing with the markets, what we're looking at here in the Dow, those are the parameters. Most importantly, I'm going to say that the weekly chart has made a peak E, and so far the technicals are failing to respond to the upside. I believe today, 4 o'clock, if the Dow closes anywhere around here, what I say to subscribers, I'm expecting some kind of a doji close today, upside, downside action, and then narrow close. So it depends on where we close, but if the Dow closes somewhere around here, I have to go from a weekly sell signal to a potential sell mode. It's really close to a sell mode, and that's because it'll be the second time. No, look at that. It's 1, 2. This will be the fourth time that the weekly has closed underneath the 9-period exponential moving average. But I have to tell you, the price has not been tremendous on the downside. So now the S&P, the SPX is, let's see, SPX is right now. I'll run these numbers quickly with my one hand. Here we go. SPX has made a trough, that's a trough E, I believe, 1407.56. No, 14, yep, trough E, with a single leg A. I call it a gray leg A. I teach this in my, the education that I give based on the ChapmanWave in the Master Trader Series. Now, I call it the Master Trader Series, but it's really how to trade, mastering certain technicals. And they are so easy, the technicals, to find and to use. Look at this. You make a peak F in the ChapmanWave. That's very important. The peak F, when the technicals are fading, says be careful because that could be a serious time and price move. Well, the S&P went from 1474 down to 1403 in just a couple of weeks. And now what we're looking at is if there's a bounce, and the weekly chart, like the Dow, made it this way. This time it's made a peak D. The other one made E in the weekly chart. And I got the sell signal, but it hasn't gone to a sell mode yet. I'll have to wait till 4 o'clock to see if that happens. Now, of course, you all know that we're looking, well, those of you involved with ChapmanWave methodology, know that what I'm looking for is the way of any pullback from here is going to be very important, because the monthly chart will say, be careful, because this could be a peak F top. That's his sixth highest peak from the 66.79 March 2009 low. In fact, there's already a peak. Is it peak B or is it peak F? I don't know, but I can tell you this, that if the S&P at any point in November breaks into the 1348 area or lower, I have to consider that that's a peak F and that you're probably going to get a far more serious pullback. If, in fact, we're saved by the S&P holding above 1388, the 9-period exponential moving average, but preferably by this time next week, trading somewhere into the 1460 area or higher, there's a real good chance we're going to make a leg seat to the upside. That's the way this methodology works. And up until now, what I've been doing for my subscribers is buying, going to long positions, and looking at short positions. So far, they've mostly been working out very nicely. Now comes the big test. Do I overweight one of the sides or the other? I'm actually looking at more stocks to the short side than the long side. I'm not sure yet whether it's a market commentary or not. Let's go to John in Philly. Hi, John. How are you?
Good morning, Basil.
How are you doing?
Very well, thanks. Hope you're doing the same. Sir, I was just listening with interest to your review of the indices.
Yes.
So thank you for that. Understand what you're thinking. A real specific question, if you will, please. I made note this morning with the higher open and then little fade that the Dow Jones Industrials had not gotten up and surpassed the low that was put in, what was that date? That was, I think, October 12th, the Friday.
Are we talking about the daily chart?
The daily chart.
Okay, yep.
And I'm wondering, in the ChapmanWave, is there any significance, as you see it, that today's high on the open did not fail to clear the October 12th low in the Dow?
What I've done and what you'll be able to see on my chart is I've got a little green section here. I'm not sure if I have to change that color or not. And that goes back to the 13,330 high of the 21st of August. And what I did is I took the lows of 13,253, 13,251 of the 10th and 11th of September, and I've drawn it across to show that is like a fulcrum. It's like a sine wave going above and below. It's also been tremendous support, and now it's very strong resistance. More important to me is not so much the price movement. Oops, I hear the music. That was quick. But it is the way that the MACD, the fast-moving average of the MACD, that's the green line that I'm showing here on my chart, how it responds. And I'm going to talk a little bit more about it because what I'm looking at here is the potential for a rally failure, and I'll explain what I'd be looking at. So, John, if you don't mind.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We are back. This is the Tiger Technicians Hour, and I'm here Monday through Friday, 11 o'clock till noon, and even more importantly than that, I have two services. One is a daily service that's called the opening call. It's a very comprehensive look at the markets. I look at the different parameters I teach my subscribers what to look at for different indexes and different methodologies and different tools that can help them intraday. But even more so, what I do is I choose stocks that I feature based on the ChapmanWave, and I show the different peaks and troughs and what the wave counts and how we're going from the 120 minutes to the daily to the weekly to the monthly. And at this point, we've gone back to being long and short. That's what I think a bifurcated market deserves, a bifurcated portfolio, one that means you want to trade the stocks that look good and you want to trade the stocks that look poor. And that's one thing. And the other is I've got my Master Trader Series coming up on the 6th and 7th. And as I say, I call it Master Trader Series because of all the work I've done. But basically, it is to teach anyone the basics of the ChapmanWave, how you can go from the different peaks, how you can use channels, the arch formation, the troughs, the cup formation, how you can go with the plumb line from the left side to the right side. Very comprehensive, and how you can use the waveform. So I'm going to ask John if you can hold on. Hello, John, you there? I'm not sure. I think they asked me to call this. Johnny's gone. All right, John, what we got here, we were trying to reach our winner, and I believe that we're trying to get him online. And sorry, John, that you got bumped up, but I'm sure you're listening. This is what we're looking at the Dow. What I said is, in the slow stochastic of the slow stochastic of the 120-minute chart, the Dow is only at 75%. The MACD is good, but it needs the stochastic to hold. So that's very important. I want you to clarify that and what I'm looking at here to make the arch formation. But most importantly, I'm going to say Steve from Lackawanna, New York, is our winner. Our winner of the Great Panther Halloween Great Silver Giveaway. And he gets a 1-ounce silver bar. I believe it's a bar. Is Steve there? I'm not sure if Steve is. No, he's not there. Oh, what a pity. I thought Steve was going to be there. Well, we're trying to reach him. But, Steve, you are the winner. Let me say it again. Steve from Lackawanna, New York. You are the winner of our Great Panther Silver Giveaway. And we're giving away a 1-ounce bar, I think it's every hour. And you can sign up. Even winners can re-sign. Go straight to the front page of TFNN, and you can sign up. So, could you call in, Steve, at 877-927-6648? We'd love to be able to speak with you. If anyone is listening and knows Steve from Lackawanna, please tell him he's a winner, and then he can call in. Now, let's get back to the markets. So this is what I'm looking at here. And I'm going to go back to the question that John had asked, because I'm sure that he's back in the den and he's listening. Now, there's a chance, and I talked about this a little while back, that the arch formation that was made in the rally from 12,775 in the Dow, that was back in the 2nd of August, to the high that was made back about the 21st of August at 13,330, and then a pullback to a higher low at 12,977 before spiking to 13,653, pulling back, making a cup formation, slightly higher high, and that's a new recovery high at 13,661. And then the pullback, that arch formation, look at this. I'm going to do this. I'm going to circle it right there. I don't know what color it's going to come up. Yellow is good. Now look at this. See that? That very well could be forming a head and shoulders pattern. If it forms a head and shoulders pattern, one of the reasons why I dislike it intensely, just as a pattern, is that the confirmation is when a chunk of the work has already been done. It'll be confirming that it's head and shoulders if it closes down, breaks under 12,977. Well, by then it's kind of late, right? So you want to be proactive here with that pattern. Well, the stochastic has risen from the single digits to 18.30 in the daily chart. I want to see way above 20% to be able to push higher. Now, the MACD, this is what I wanted to talk to John about. Just to say, John, if you're looking at my charts, you will see that there's an inflection point here in the MACD fast-moving average. That's the green line that you can see there. The red line's the slow-moving average, 9-period differential. That's that green line. That's the one that's going to be so important. If within 3 days by Wednesday it's starting to pull back and not cross positive, this market is going to come tumbling down. And then 12,916 will be the 200-period support. I'll be right back, and gold is tumbling. I'll be back to talk about it as soon as we return from these messages.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, 877-927-6648. And I'm showing the chart of gold. I've got it down 33 right now at 1682.7. It might be just a tad behind, but what it is, and I've spoken about it a while back, and I keep talking about these important moving averages. And why are they important? They're important because they are the look back, the internal look back of the very tradable that you are following. And in this particular instance, the look back period, the 200 period exponential moving average, was just an amazing resistance line right from, there it is, from April the 26th of this year. It could not, I wonder if I should change that. I'm going to just change it for now. Let me change it because I want you to be able to see it. I'll make it, I don't want to make it, I'll make it blue. All right, blue, there it is. See that blue line? Well, that blue line shows that every time, you remember, you see the C1, C2, B minus, C again. Every time it tried to get there throughout the whole summer, it could not break above. And then all of a sudden, one day, on the 21st of August, 2012, pow, it went right through, and it didn't look back. It went straight from that level to the 1798.10 high, a peak G high in the ChapmanWave, and then it comes plummeting down. And where would the target be? Well, there's a left side price time match, which today, exactly, it pulls back, breaks underneath that. Where is it going to? The 1,673 level. That's the 200 period exponential moving average. That to me would be a a target that says, gold is pulling back strongly, and the only time it's going to find support is if it can start to turn that level into a base. Even if it goes underneath it needs to go underneath it, then come back, and then treat that level that was 1578 was the previous high, the cup formation, left side, right side price time match from back in 1st of May to the breakout that 2nd of August, was it the 31st of August? So that whole area between 1573 and 1578 could very well be testing. Oh, that's a 15, isn't it? Is that a 16 or is that a 15? Let me double check. Yeah, that's 1673. So that can't be 17. Yeah, that's 1678. I kept thinking to myself, wow, that looks way higher. So that's 678.80, I think. So you go 1,678, and I'm not sure whatever, I'll call it 8. So that's the level that we're looking at. You've got two levels that are very important. The 1678 back in May the 1st, that area, and then to the 1673. So if I had to draw another rectangle formation of support, I would just put it right there and say, hey, this is going to be really important for gold to hold, that whole area, that gray area that you're looking at. So if I go to, you see the euro is also pulling back. I mentioned it for my subscribers. I talk about the TLT. I talk about the euro dollar. I give parameters. I talk about the GLD. And I've been saying the GLD looks terribly weak. And what I'm expecting is that gold's going to pull back and that the dollar, which is constantly being pushed lower by the Fed, that's my belief, at some point it's just going to break out because it's like a release of tension. It's like a geyser. That power needs to get out. Where is it? It is on the 200-period exponential moving average, just about to break above it in leg. Double check here. So that's 80.15, 80.14. So this is leg A, B. This is leg C in a brand new buy mode in the dollar. Now, it doesn't mean that the dollar is going to go skyrocketing all the way to the 82s. I can't say yet for sure. What I can say is, trying to balance the telephone between my chin, like a violin player, my chin and my shoulder. Yeah, I think that it has a chance at least to get to the 80.90 area, into the 81.30 area, just with the power that it has right now. And that's very important. Why? Because here we are. It is just slowly punching away at the upper level resistance. But at the same time, it's a very quick A to B to C, just as it was before. And that says that going into Wednesday of next week, everything is up for grabs. You've got the dollar. You've got the euro currency. You've got gold pulling back. It's not pulling back. It is cascading lower. And I have not liked gold at all. See, the euro is testing. The cup formation is broken down. This is a ChapmanWave cup, and this is the pattern that I call the drop bucket pattern, where it fails at the top and it starts to pull back. Just the pattern that is doing right now. It says the euro 1.28028. That is going to be absolutely key. If it breaks that, then the candle I'm looking at, the ugly candle, or the very good candle of the 7th of September, which will turn into an ugly candle if it's taken out, 1.262 would be the base of support there. So that's why I'm looking at this, and I'm saying, I looked at bonds very closely the last couple of days on my battery-powered laptops, and I'm saying to myself, there's a 200-period moving average acting as very key support to the TLT, the 20-year Lehman T-bond fund. That's going to be, the sideways trading pattern can continue, but it'll start to break down if bonds go under 120, and certainly if they break 118.05, I would say that it's all over. Interest rates are going to be pushing quite a bit higher. But as I'm looking at it now, as I'm looking at the TV screen with these New Jersey gas, unbelievable. Look at that. Look at the lines. Wow. Anyway, all right, back to our story. When I look at the 200-period exponential moving average, that blue line at 121, is that 17? No, 121, around about 121.20. That's going to be very important because if T-bonds start to break above 123.70, my rationale over the last week has been until bonds push into the 123.85 or higher area, we kind of trapped in this range. Everything's trapped in this range. So I'm watching it very, very closely. Oh, okay. So now I get to what everybody's waiting for that knows my work. I'm looking at the volatility index. Well, the volatility index is at 16.90. It is still very positive. It is giving support to the market. So let me explain what I'm looking at here. A trading band has been put in place. If you are looking at position plays, I prefer, and I've done it for a while, to avoid right now, I think from end of next week or sometime next week, I believe I'll be going to the indexes to play long or short those positions. I prefer to go for the stocks right now. I want to see how the stocks are acting. I want to see if the stocks that I've pinpointed as having potential upside are working and continue to work, because in one case, it's a stock that is absolutely storm-related. It's economy and storm-related. And the other case, it is totally unrelated to anything, almost anything to do with the market itself. And these two stocks that we're long are doing very nicely. It's only 2 days, 3 days, 2.5 days actually, that we've been long these. And so far, they're nicely above the entry point. That's part of the point. The other point is these stocks have to continue rallying. If they start to pull back, then I'm looking at stocks that should be avoiding the market, being market sensitive, and I'm looking at stocks that should actually be doing well, regardless of market conditions, pulling back. And that's going to say to me, be careful. Now, here's the other thing. If the volatility index does start to climb by midweek next week, watch that 20 or higher level. You go higher than 20, that's going to be very, very, it's going to make it more selective on the upside, but less selective on the downside, because more and more stocks are going to start coming down. So that's the way I'm looking at the market right now. I'm looking preferably to be more, not preferably, the choice is that there are more stocks that I'm looking at on the downside that have patterns that I like than on the upside. But there are still some very strong stocks on the upside. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Hey, Basil, good morning.
Good morning.
I'm trying to get into SMH long. Do you think this is just an oversold bounce, or this is a new uptrend that's starting up? I wanted to go in long on that, on this pullback.
Well, once again, I'm going to show folks who are looking at my charts that you'll see the SMH, which is the Market Vectors Semiconductor ETF. It's just a conglomerate of ETFs that make up this particular index. What it is doing right now, it's stopped dead at the 200-period exponential moving average. And that moving average has been really important as support and resistance for a long time. Now, I will be playing tennis with my good friend, the semiconductor man, over the weekend, but at the same, and he's been pretty negative about the whole sector. He considers that they've been pulling back their orders, etc. I have to tell you something. I'm absolutely fascinated at how well the semiconductor index has actually held. So, have you got any position at this particular point?
Not yet.
Not yet. So,
I wanted to buy that SOXL, the direction shares.
The SOXL, right? That's the so that one. It's a double, right?
Yes, the triple.
No, that's a triple. Yeah. Well, the way I'm looking at this, you see, there's a different chart pattern. When you go to the XOXL, it's at 2550. That's the DXN daily second 3 times long, the semiconductor index. And when I'm looking at the stochastic still only at 46%, but the MACD has turned around with a nice divergence to the upside. This is what I would do if I was you. If you have no position at all,
yes.
I would have a little patience to get through the day today. I don't. It's down 64 cents at 25.50. Let me tell you something. If this is going to work for you, I would prefer that you either just tiptoe in very lightly if you want to get in now. My own preference, if you ask me, what would I do? I would hold off today, and if it pulls back again on Monday, I would hold off. And if on Tuesday it starts to hold firm and it's starting to rally, and on Wednesday it actually starts to move sharply higher, that's when I would buy it. And I'll tell you why I would have patience to wait. At this particular point, I don't think it's going to go much higher than today's high of 26.35. So if it closes somewhere around here, and on Monday it kind of moves up just a little bit, or it moves down a little bit, you don't really have anything to lose. And I'll explain what my reasoning is. If this is going to be a new buy signal, and I've got just a sign to say it's a buy signal, but it isn't the buy mode. The buy signal, if at the end of the day it's something like this, I'd have to say, hey, at least in the short term, I think I'm getting a buy signal on the ChapmanWave. I don't have a confirmation yet of a buy mode because I need to have 24, 23. Yeah, I need to have either a pullback and then leg B start, or I need to see this get at least above the candle of 2677 of the 17th. So you're not really missing very much. You know, you can see my reasoning.
Yes.
To buy it here, you can put in a stop of 25.50. If you just nibble at it, you can put in a 25.50. You could put a stop in about, I wouldn't give it very much. The day's low is 25.30. I would give it a stop of 25.29. I think that's reasonable. But if you had to ask me what would I do, I'd probably say I'm going to hold off, because if this is going to have a very strong rally, to miss a point or a point and a half, I don't think is a big deal. But if it suddenly gaps down on Monday, I don't really want you in it, because it's going to start to turn that stochastic negative. So this is one of those where, on a strict basis, you could nibble here because I've got a buy signal, but it hasn't gone to a buy mode. But the stochastic is over 20% at 46%. The MACD is cross positive, and there's price movement commensurate with the technicals. So those are the four indicators that I'm looking for. So I would say nibbling is good.
Okay, thanks, Basil. And when you get a chance, I don't know if you talked about energies already. Is it possible to talk about energies?
So would you like the XLE?
Yeah, I just want to look at it. I'm not in a position.
All right, so let me do this. You're looking at what, the long side or the short side?
Usually I look at the long side.
I would not be looking at the long side. I'm going to go to my black background chart on the XLE, because I know that one was done very... There are. The black background chart says this is likely to... It's at 71.72. The XLE is the S&P Select Energy Spider Fund. There's a lot of evidence right now that I'm looking at that says if 71.54, the low of yesterday, is taken out, there's just a really good chance that the 70.60 area of the 200-period exponential moving average is going to be hit. If that is hit, then there's very little support other than this 200-period moving average until it starts to fill the gap at 70.02 to 69.52. That's the gap back in early August. So I'd be looking at the XLE more as I don't know if I'd look at it as a short right now, although my weekly chart is saying, hey, you've got to be real careful here, because this needs to get to 73.50. 73.25, 73.30 to start to improve the weekly, and that'll be a good sign. But Freeman, I must tell you, I'm a little concerned. I don't think that the XLE is looking very good at all. The monthly also is making another H formation, so it's going to turn it into an M. No, I wouldn't be going along the XLE until I get a lot of evidence of support between 71 and 70.30. Hope that helps you.
I appreciate that. Basil.
Thank you very much, Freeman. Always great to hear from you. Freeman in Dallas, Texas. We'll be right back. Basil Chapman, 877-927-6648. Dallas down 40.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. This is the final segment of the show. So let me give a summary, because it's what happens after the election that's going to be very important in terms of parameters. I've given the Dow, and I'm going to just do this. I want to look at the Qs, because it's very important that we continue to look at the Qs. That's the NASDAQ, Power Shares, QQQ, Trust Series 1. Nice bounce. Where did it come from? It came from exactly on the 200-period moving average. I mean, this has been a show today, Friday, the 2nd of November. It's an education in 200-period exponential moving average. Look at what happened. It comes all the way from the 70.58 double top, peak C1, C2, and then I give the down arrow because of the technique that I've developed in the ChapmanWave, and I'll teach that in my all-day webinar. It's a webinar. Go to the front page of TFN and see what you get. I've thrown in bonuses. I've thrown in a chunk of stuff. I love teaching about the ChapmanWave, and it is such an important technique. If you learn to use it, it really can help you a lot. So C1, C2, 70.58 is the high. 58 was the high of the 19th of September. 54 was the high of the 21st. It's 5 cents difference in making a new recovery high of peak D. So it's called C1, C2, and you get a down arrow. It pulls back, and it goes trough A, trough B, and all these little truffles come down until this final one with a doji candle of 64.65. That 64.65 candle of October the 26th is really important, because it says, hey, there's a little change of trend here. For the change of trend to hold, it's going to be really important for within the next 3 trading sessions for the cues not to break 65.24 and then retest 64.65 and break down below it, but instead to start trading into that ugly candle of the 19th of October towards the 67.27 level. Now, that should have been possible if there was a very strong session today by the close, with the close not, above the 66.21, towards the 66.21 high that we've already made, rather than being closer now to the lows and the highs. But when you look at a stock like Apple, and I was going through this yesterday, Apple hit 591 round number low. Is that correct? No, it went a little lower. It went one. That's a silent doji. Okay, so it goes to a 587.70 on the 31st. Tries to rally, and now it's and there's that 200-period moving average again. That is so key to this whole thing. If it starts to break under it, Apple's saying that the analysis that I've been showing for a while here on the weekly chart, where there's a potential inverted V-shaped level, V-shaped left side rise with a right side after the doji high of 705.07, a pullback every week has been a sequential lower low. And now what we're looking at is a chance to test the uptrend, the major uptrend support level that's still in place, and that corresponds to the low that was made back in the week of the 18th of May at 528.66. So now what we need to be cognizant of is that this down arrow, I have to put a down arrow there, in the weekly chart corresponds to the monthly chart, which has a peak E doji reversal and that 9-period exponential moving average at about 580, a quarter of 585, let's say. That's going to be critical, because if Apple starts to close weekly in November with lower lows, and then it takes out the key support around about 555, wow, that MACD is going to test the fast-moving average is going to be tested. Can it bounce after that? I suspect at that point it will bounce, but it means that the stochastic, which is really good at 83%, will start to weaken. So this is very critical for the potential of a hat-trick top in the daily, weekly, and then the monthly. So how Apple responds in November is going to be very important. Why? Because there's such a big weighting in the queues. So I'll be back on Monday. Over the weekend, get a chance if you can. You can get 2 weeks free of my opening call, a really comprehensive look at the markets, and we're doing quite well. So now what I'd like to do is say have a great weekend. And those of you who are still having problems from the hurricane, I hope everything works out well for you as it has.